Good afternoon, ladies and gentlemen, and thanks for joining us on today's City Business News Now presentation. As a reminder, this session is being recorded. Zoom participants can submit their questions at any time by clicking Q&A at the bottom of your Zoom control bar. Now, please give a warm welcome to Lisa Blossman, publisher of New Orleans City Business.
Thank you, Jenna, and thank you to everyone for joining us today. Welcome to CD Now, the City Business webinar series. This is our midweek recap where we will learn from experts on the state of their industry. Now, I'd like to introduce City Business editor, Natalie Chandler.
Hi, everyone. Thanks for joining us today. We are talking about internal controls and what you can do to prevent employee theft at your business. Our panelist today is Astrid Potts. She is a senior manager with Wegman & Dezet. Thanks, Astrid, for joining us today, and tell us what we need to know about this topic.
Absolutely. Good afternoon, everybody. Thank you for this invitation. And well, today we're talking about internal controls and reducing the risk of employee theft. You know, I think that the majority of us here are either in the management function of our businesses or in the ownership level of our business, right? And one fundamental thing that we all need to keep in mind is that we are required to produce transparent information. The definition I'm going to read you is right off the SEC definition of transparency of information. Basically, it means timely, meaningful, reliable disclosures about a company's financial performance. To have financial transparency, one must protect the integrity of that accounting information. And why do I say that? Because the individuals that are on this call, like I said, are probably management, are probably owners, right? And we have a fiduciary responsibility either to the lenders, to investors, to our bosses, to the owners. What is a fiduciary responsibility? The fiduciary responsibility is the obligation that I have to you to be honest, to act at the highest level of integrity, even if it's at my own detriment. So with that in mind, right, let's move on to the obstacles of the integrity of and transparency of financial information. One is the adequacy of the accounting, of understanding the accounting rules, right? There may be a new accounting pronouncement that we are not familiar with. That one is very easy to overcome. We go take a CPE course. We consult with experts. We look for options such as a virtual CFO. So that one should be easy for everybody to take care of. The other obstacle to the integrity, reliability, transparency of accounting information is an inadequate accounting system. Again, that one is easy to overcome. All we have to do is upgrade our accounting system, right? Or accounting systems, depending on how large your business is. The biggest obstacle for us who carry that fiduciary responsibility is dishonesty and poor ethical behavior. The good news for everybody here is the fact that although it is the most difficult obstacle to overcome, there are answers to being able to meet our responsibility. As we know today, we're going to focus on fraud. And in this particular session, it's going to be employee theft. But fraud is categorized into three buckets, basically: theft, financial statement fraud, and asset misuse. And so you know, theft or misappropriation of assets makes up the majority of fraudulent activity, according to the Association of Certified Fraud Examiners. The average loss to small businesses, okay, it's $150,000. For many small businesses, that would be enough to bring you down, right? The average time is just based on this report, and I invite you to go read it. It's called Report to the Nations by the Association of Certified Fraud Examiners. You're going to find some things in there that you probably will be able to understand. If there's anything that you want to talk about in more detail, I'm available to have a conversation with you. The other key thing that they are reporting on is that it takes approximately 14 months for the fraud to be discovered, right? So what is our biggest enemy in relation to meeting our fiduciary responsibility? Fraud, unethical behavior, right? So with that in mind, the first thing that I would do if I were in your shoes would be to educate myself. All right, what are the red flags that I got to pay attention to make sure that I'm not potentially going to step on some sort of, difficulty that may even cost me my job, right? I'm going to go through a list, but by no means is this an all-inclusive list, okay? It's just the theme that continues to repeat often and often when we find situations where employees have, bitten the hand that feeds them, if you will. Which, by the way, there's a good book for those of you who would like to read it. There's a book, it's called Biting the Hand That Feeds You, and it specifically talks about employee theft. We'll talk about some of the characteristics of these individuals in just a little bit. So going through the list of things to watch out for: unexplained drops in profit, paid checks without readily available support. And if you are utilizing a rubber stamp in your business because it's convenient, because you might be going on vacation for a period of time, I want to tell you to stop using it, or make sure that the controls surrounding its utilization are very tight. Missing inventory, it's a terrible one, especially for retailers, manufacturers. Payroll and expense discrepancies, undue travel expenses, disappearing office supplies. And this one is going to be interesting to you because, idle, unproductive employees is actually theft. The reality, though, is that, if your employees are not as educated as we hope that they would be, they may not be able to make the connection between surfing on the internet all day long, being on personal calls, okay, and stealing time. And in reality, that is exactly what is happening. I'm not saying that, if you got idle employees that everybody needs to go out the door because you don't need them. It's basically probably that you do not have enough time to keep them entertained, to keep them occupied, and you may need to diversify them and send them half day to one area of your business and the other half day to another area of your business. You can maximize their productivity. It might be an innocent theft. They may not even know. So be aware, be alert, be smart about discrepancies in the way the business runs. So internal controls, as the majority of us know, are basically put into three buckets: preventive, detective, and monitoring. I favor preventive controls. And the reason why is because I want to stop the issue before it happens, right? Detective, of course, is, you're going to find something after it already occurred, after the $150,000 went out the door. I'm exaggerating, of course. The theft sometimes is less than that. The theft sometimes, sadly, is more than that, right? But preventive is what I would suggest that you look at first. In monitoring, of course, you want to make sure that everything remains relevant, that the controls that you have in place, to the extent that you have controls, continue to be monitored to ensure that they continue to be effective, to reduce the level of your exposure to an acceptable amount. You're not going to be able to get rid of theft, okay? Not in its entirety. I do not believe so. But you can reduce it to an acceptable amount, which is, of course, if you're a business person, you know that that is the cost of doing business. It just doesn't need to be an exaggerated cost that could potentially lose your business. And for those of us who are at the management level, lose us our jobs, right? And if we take our fiduciary responsibility seriously, it would have a very detrimental impact on us emotionally because we let somebody down significantly. So going into preventive controls, what is the number one thing that I would suggest that we do? And that is going to be ensuring that the employees are actually informed. Let's not assume that they know the difference between good and bad. Put it in writing, okay? This is what you're allowed to do when you go on vacation. You're allowed to take a week's vacation, but you got to go through all this process. You got to make sure that you record that you were gone. Individuals who like to take long lunches, right? Fine and dandy to the extent that we are entertaining clients, fine and dandy to the extent that we are taking care of personal matter. But I'm gonna need to make up that additional time later on. I should not be making a habit of taking long lunches because, as I said before, I am stealing time. And here's a good thing, not a good thing, excuse me, here's a good example of something so innocuous as that created an enormous problem for an executive director. This particular organization had these two persons that decided that taking long lunches was within their right, did not dock themselves for the additional time, when shopping, and little by little, if you let them get away with little, they're going to continue to get away with a lot, right? Once it was discovered, and by the way, it was discovered because somebody turned them in. Once it was discovered, right, then it was like a little thread. Okay, what other internal controls are not in place? Where else did this executive director leave the board of directors hanging? Where else did she fail her responsibilities? Right, so you let them get away with a little, be prepared that is going to be a lot. She lost her job. The individuals did as well. All right, so employee manuals, accounting manuals, and a code of conduct. I know that the following statement is not going to be foreign to anybody, right? Tone at the top. We have to conduct our sales in the highest ethical manner so that people know that we hold ourselves to fire, and more importantly, that we also will hold them up to that level of ethical behavior. Here's one that we all know, all right? And we do not have time today to go over every single thing that we consider an issue with segregation of duties. We call them incompatible duties, right? But we all know that we got to separate authorization from approval. We know that we got to separate the custody of the assets from the same individual. And we know that we have to separate the recording of the transactions from the same individual, okay? If your business is small and your accounting department is small, the fact that you do not have that segregation of duties is not the end of it, right? There are mitigating controls that you can put in place to continue to protect yourself. Ideally, separate them. Continuing preventive controls, do background checks. They're relatively inexpensive, and you really want to know who you're bringing on board, to spend at least 8 hours with you, to spend at least 8 hours with the other employees that you hold in high regard, right? Never neglect doing a background check on individuals and checking references. Here's one thing that's really important for everybody to understand, because it really brings forward how internal controls are fundamental, right? I think that if not all of us, the majority of us are familiar with the Freud triangle, right? The pressure, imagine the triangle, the pressure, the incentive, the pressure and the incentive fall in the same category, the opportunity and the rationalization, right? Freud triangle. Before I go into that, I want you to understand a formula that we've been using for a while when you are in the attestation side. It's called the 10-10-80 rule. The 10-10-80 rule simply indicates this, and it was put together by criminologists. It's been out for many, many years. And it basically says this: 10% of us will never do anything wrong, no matter what. 10% of us will always be doing something wrong. And you got to read that book if you get an opportunity, because some of these people actually get a kick out of stealing, okay? It's a pressure release. It's some sort of mental illness. And 10% of us are put in that category. 80% of us, given a certain set of circumstances, potentially will do something wrong. And that set of circumstances would be a dire financial need. Maybe I have a drug problem. Maybe I have somebody ill, right? And I need that money. How do I rationalize that? I'll just take a little bit from you today. I might be able to recover it next month. And so I think that I'm going to make you whole. But in reality, that never happens, right? Or you may have some disgruntled employees that may think that you're not paying them enough. And that's a way for them to get even with you, right? But how do you protect yourself? With the internal controls. You take away the opportunity. So if you go back to the triangle, the pressure, the dire need, right? The rationalization, you don't need it. You're a rich person, right? That you cannot do anything about it, or very little that you can do about that. The last line on that triangle is the opportunity. And you can do plenty to take away the opportunity and the performance of your fiduciary responsibility to whomever you have it. Investors, lenders, bosses, your own co-workers. Continuing on preventive controls, I got my watch in my hand because, you know, like I said to you all, we have a lot to cover. So I'm conscientious of the time. Some of these I'm gonna go through very quickly. Be active, be engaged, whether you're an owner or a manager, know what's going on around, right? Do surprise audits. But take a look, you are the CFO, you are the controller. It is more than your right to ask somebody to give you the information that you need in order to get comfortable with the movement and account balance, right? You can do surprise inventory counts, cycle counts. You can, if you are in the construction business, you can go to the work site and you can make sure that those 20 employees that you're paying dutifully every 2 months, every 2 weeks, are actually all diligently working for you. Surprise that you get to the work site and you only find 5 employees, right? And of course, and this cannot be understated, all right? Establishing a fraud hotline is actually one of the most effective ways of discovering fraud. The reason why is because, and it's got to be done appropriately, right? It's got to be anonymous. It's got to be managed by an independent third party. It's relatively inexpensive. An employee feels safe that there is not going to be a retaliation against them. And the Association of Fraud Examiners have reported that 50% of all fraud cases come out of that hotline. All right. 16% of all fraud cases come out of anonymous reporting. We don't know if it's employees. I would imagine that is probably employees anonymously reporting. And interestingly enough, 22% of reported cases of fraud came from customers themselves, right? So if you are seeing, whether you're in operations or you're the accountant, what have you, right? If you're seeing that one of your employees is having an inappropriate relationship with any of your customers or your vendors, that should be a red flag for you. If they're getting a little too close, you know, it may be that they're having side deals and your inventory is going out the back door. Or it may be that they're having side deals and who knows, maybe you're paying extra for material because somebody is trying to get the upper hand on you. It could be the 10% that is always looking to steal for kicks, or it could be the 80% that is in a dire need, right? What's the right answer here, so that we know that we're not alone, so that we know that we have the tools necessary to protect ourselves, is the establishment of internal controls that are effective, right? Because we can sit here and talk about internal controls for hours, and in reality, you end up with a list of internal controls that may not be effective for your particular business, right? Internal controls may be as different from Lisa as they are from Natalie, because they're two different persons. They probably have two different businesses. Well, good news. We finally made it into detective controls, everybody. As you can tell, I favor preventive controls for the obvious reasons, okay? Let me read you a list of detective controls. You're not going to be unfamiliar with them. The execution of the control is a different story, right? You have to have the appropriate training to be able to execute it precisely enough to be able to cover yourself. So we'll go through these. Surprise audits, right? Whenever you feel like it. You know, one of the good things about some of these things that I'm going to read is that you depending on how you execute it, you can be in the detective control arena, if you will, and you can also be in the preventive controls, because if they know that they're going to have to answer to you, that's going to be a deterrent. If you put expectations in front of me and you hold me to those expectations, it is going to be a deterrent, right? I don't want to lose my job. I don't want to make you upset, etc. So unscheduled surprise audits, we use those often. Perform reconciliation of the financial statements to the general ledger. That's fine and dandy, but I want to remind you that it is your right, and I advise you that in addition to performing those reconciliations and making sure that the reconciliations are done, you want to make sure that there's a voucher system that supports the reconciliation. Invoices, receiving reports, you know, an authorized list of vendors, right? A proper system where you are vetting your customers to make sure that they actually have the wherewithal to get in business with you. Monitoring the efficient use of vehicles, you know, a lot of people take advantage of that, and you will see, you know, company vehicles all over the place. You can install GPS machines on them or systems on them so that you know where your vehicles are at all times. Now that we're working in a remote environment, you may already have been approached by somebody who might want to sell you some sort of software that would allow you to monitor your employees when they're working from their homes, right? If the computer is idle for too long, there's going to be a report that is going to be provided to you. Now, if you're dealing with employees that have to be on the phone with customers all day long, you'll be able to, you know, discern that and figure out, okay, what's making me comfortable or uncomfortable about this person's movement, if you will, in and out the system throughout an 8-hour day. And of course, external audits, right? The bad guys. Nobody likes to see the external auditor, but you know that we take our responsibility very seriously. And we have a code of conduct, right? Let's see, moving on to monitoring internal controls. And I can tell you that a properly designed budget, okay? A realistic budget that is built up of accurate information, the expected appropriate material cost, the expected appropriate labor cost, and the expected appropriate amount of additional customers that I'm going to bring in. All right, to the extent that it's done reasonably, it's a wonderful tool to monitor, to detect, and to deter Because if you're holding me to that budget, and I take my responsibility seriously, I will make sure that I have a proper answer for you. A word of caution as it relates to all of these reconciliations that you may be performing, right? The thieves, the people that are in the business of always trying to do something wrong, will know your threshold, right? And if you're always keeping me to that $5,000 threshold, as an example, I will figure out to do everything that gets me to $4,999.99, right? I'm always going to try to stay below that threshold. So a good internal control in that particular situation is going to be the element of surprise. Fine. Last month, I asked you to explain all variances that were $5,000 or above. This time around, I would like for you to explain all differences that are $1,000 or above, right? Reason why is because little by little, all right, these guys and ladies, individuals, are not stealing buckets of cash, right? They're stealing little by little, right? And so you want to add an element of surprise. Let's see, of course, often, especially if there are changes in the types of services that you provide and the types of products that you make. If you have a change in your accounting system, you want to take a step back and make sure that you evaluate your internal controls to ensure that they continue to be effective to protect you. So let's see. A word of caution, everybody, and I want you to please pay attention to this and very, very, very close attention. Nobody wants to find fraud, okay? That's why I focus on preventive. If you do, unless you're catching somebody in the act, if you suspect it, you remain quiet, you find, experts to help you evaluate the type of fraud, quantify it, all right? Do not share any information with other employees. And if necessary, right, then you're going to get attorneys involved. And the reason why I want to caution you to ensure that you maintain all of that very close to your vest is because even if the individual was doing something wrong, but you are unable to prove it, he or she may be able to turn the table on you and sue you for defamation. All right. Here's another one, right? We think that, putting cameras all over the place is a great thing, and it really is a great thing. But in many states, and I think that in Louisiana as well, you've got to make sure that the individuals know that the cameras are live and they are being watched. All right. So it's a deterrent. All right. With all of that, I may have time for questions.
Okay, we have one. Someone wants to know, how frequently should their company's internal controls be updated?
If you are comfortable with the internal controls that you have in place now, remember, they have to be precise, and it cannot be a template that somebody has given you, right? A template is going to probably get you there very, very, very ahead of the curve, if you will, but it may not be precise enough for reducing your level of exposure to an acceptable amount. So I say that because the assumption is that the internal controls, I don't know who asked the question. The assumption is that the internal controls that you've got in place may be okay, but I invite you to critically take a look at the internal controls that you have and look at all of the transactions that go through. Think about the things that worry you at night, and then figure out whether or not those things that worry you at night have the points in time, the points of reference, the steps, the activities necessary to reduce your level of risk to an acceptable level. If we're thinking that the internal controls in place are adequate, efficient to cover your risk and to allow you to perform your responsibility to the highest level, then I would say every time that there is a change, you got to relook at it, right? And a change could be new individuals, all right? New products, new services. So I would say just follow that path, and I think that you would be all right. And again, you know, you have experts, right? That, you know, all you got to do is pick up the phone and reach out to an expert with specific questions and maybe in a specific formula for your particular need.
Okay, another question is, what if my accounting department and my operations department are too small to have proper segregation of duties? What could I do to minimize my risk?
Okay. You know, as an auditor, all right, one of the things that gives me comfort when I go into an audit, one of the things, right, as an auditor, I don't know how many audits you've all been through, but there are thousands of things that we do. But one of the things that gives me comfort is that when I see an owner that is active, all right, when I see an owner that is actually requiring that deviations from the norm, from the standard, from the budgets are explained to him or her in that level of detail. When I see an owner that is walking the yard to make sure that the goods, the material, and the labor is going into the particular vessel, the particular building or house, right? And that the individuals that are working on the job are actually working and not taking extended naps, then I would say that that would alleviate and reduce your level of risk. So that's option one. You got to be involved. You got to be engaged. You have to know your employees. There's a good one, right? Say that I am your employee, your faithful employee. You pay me $50,000. I grow a big head and I'm thinking, hey, you need to pay me more. So there is my rationale. I have some situations going on, and you have poor internal controls, right? So suddenly, right, you used to see me drive a Honda Accord. Now you're seeing me drive a BMW. You're going to wonder where I got that money, right? You have not paid me a bonus. I'm not saying that my 50 is not fair market value for the services that I provide. All I'm saying is that you got to keep close to your employees. You got to know their lifestyles. And emphasis on always maintaining that line, right? They are your employees. They're not your friends, right? So those we call those mitigating controls, right? And those are just examples. I mean, we can sit here and talk about many other ways where you can protect yourself. You could potentially, hire somebody as they call them a virtual CFO. It's an individual who adds that additional level of independence, if you will, that can help you review, that can help you evaluate the quality of accounting data that is coming out of your business. There are many answers when you do not have a 30 people accounting department. There are many things that you can do to protect yourself. And be involved, know your employees. Walk the walk.
One more question is, what is management override and how do I protect my business from that risk?
All right. Tell you what management override is. And the best way that I can do it is by giving you an example. Let's assume that all of you are a business owner and I am your manager, right? And you've got the greatest internal controls in place. All auditors, no matter what, all levels of competence have come in and have decided that your internal controls are right. But I am in that 10%, right? And so what I will do is somebody in your employee is going to come to me and say, Astrid, I'm not going to be able to pay this invoice because I have not gone through all of the processes necessary. I do not have the receiving report. I do not have all the documentation necessary for me to be able to pay it. I'm going to override your control as a manager. And I'm going to say, you know what? Just do it. I'm telling you to do it. That is management override. And so how do you protect yourself against that? You simply inform everybody that the rules always apply. And if somebody asked them to do something that was outside of the accounting manual, outside of the explicit rules that were given to them, that they be reported. If I did the right thing and I was under pressure because I was fixing to lose a good sale and I couldn't wait on something that was small, then I'll have no problems coming to you and giving you all of the supporting documentation, right? If I was in the business of having side deals with the vendors or whomever, I'm not going to be able to provide reliable, immediate information to you. And I might keep you waiting for 2 weeks while I find another job.
Well, thank you so much for this valuable information and for your expertise and your time. We appreciate that so much. And we invite everyone to our next webinar, which will be in 2 weeks, May 26th. We'll be talking about the future of tourism in New Orleans. We touched on this topic about a month ago, maybe 2 months ago, and we want to get an update on what's happening with our tourism industry. Our panelists will be Walt Leger with New Orleans & Company and Barry Brantley, chair of the Hospitality Management Program at Delgado Community College. So thank you, Astrid, again for your time and all the information you shared with us. Thanks everybody for joining us. We'll see you May 26th at noon. Have a great day.